Hey guys, this is Simon with Trade and Perform Coaching. I'm going to pop this up here real quick. Just take a second to read it. I'm going to leave it up there for 5 seconds. And now I'm going to lower it. And so um, someone asked me, what trade would I take if I were going to run the trade manually? What trades would I take? So I can answer that. And the person who asked was Mohammed. So let me answer that really, really easily. Mohammed, the trades I would take, and as you know, these white lines were already up here. This is my chart book from Friday. I can show you exactly. I would take the green and white bars with the yellow dots on top of them with a 1 bar stop. So if we pick it up at 8 o'clock, it would be this. I would come over here. It would be this. This would be a stop. So we'll color that red. Oops. It would be I would take this. Oh, one more point. On the turn bar only. If you're saying I had to have it right, it would be on the turn bar only. So it would be that. So the way this would have gone would have been, if you had your stop exactly at the low here, you would have had to take it twice. It's 8 o'clock. Most of us aren't trading here. So would it be stop, then win, stop, right? Um, win right here, right, where you see my mouse. Here, I'm going to make this bigger. And then it has to be on the turn. So my next trade would be, no, it wouldn't be that. Win right there. This would be a stop. Oh no, there's no yellow dot on it, excuse me. Right here, this is either a win or a stop depending on how you scaled it. It was late in the day on Friday, so most of us aren't trading at that point. I'm certainly not. Um, Again, same thing here. If you're trading this late in the day, I usually don't recommend trading the last hour for lots of reasons. Let's see if there was anything, and that was it for the end of the day. So what you ended up with was, um, let's go into it. It would be, so if we traded once the market had opened, I guess that would be the best way to look at it. Oh, I missed one right there. Oh, no, no yellow dot. So it would be trade one would be a stop. That was at 9 o'clock, and we don't trade between 8:59 and 9 o'clock. 8:57 to 9:02. Oh, that fell outside. So yeah, that's lost one. So this would pitch you minus 20 points on one contract. You're down $400, right? This is obviously a nice win. And what you're trying to do on these, if you can trade more than one contract, is take it level to level, right? You're trying to carry it up from that 02 to 58 or get 20 or 30 points out of the trade. Again, your stop's approximately 20 points. And Friday was a difficult day, right? We're clearly in a downtrend here. Um, see where our next trade is. Right there. So remember when I've been posting, if you took those trades, and let's say you did a 1-to-1 RR, your first trade's minus 20. Your second trade was plus 20. Let's say those are your targets, and your third trade is plus 20. This one pitched you on one contract up $400 on the day. Um, and these, I was wrong. This doesn't have a yellow dot on it. And then this one, I don't know how you would judge that. Again, it was at 2 o'clock. I wouldn't trade it. You either went back to flat, you scalped it out tight, but it just did not. Did not lift, and I would have been clearly done by 4 o'clock on Friday. So here's the litmus test. This is how this works where it looks good. We go to a day that I've saved. Oh, this isn't good. File, open chart book. So I usually save dates from prior chart so we can see what this looked like. So this would be a, well, they're not, it is not in here, believe it or not. Let's see. 613. Okay, so we can go back to, or we go back to 614, which was at the beginning of the week, right? And we can see the same setups or how those would have looked if we let them load. And you'll have an idea again manually what that would look like. So give me just a second. And I'm going to do an entire series on this. What does the trade look like when you are able to grab consistent trades, or what those trades look like from a manual standpoint as well. And this has to roll over. Sorry about that. Let's get that done really quick. And that means all the lines are going to be off. Let's see if it'll do it all at once. It won't let me roll. Oh, it's still trying to handle it. Hold on a second here. So let's do this really quick. See if it'll get it. We have to wait till this loads. But I want to point out something while this, it's going to take its time thinking about it. While this loads, I want to show you some basic stuff that'll help you out. Okay, so now I don't know if these lines have rolled over properly or not, and that's a problem. So I want to show you something just in general of what to look for when you're running the algo. But just a second. There we go. I don't think these white lines are correct. I'll have to go back and reset them because I don't know how to get them to roll over properly with the contract rollover. Okay, so what I want to show you instead, so I'm going to go to a plan B, right? When you get the green bar with a yellow dot on the turn, let me see if I can show you that. This is back on the 14th. It really doesn't matter because the lines aren't going to be correct. So what I want to show you is, let me go back here a little bit. The on the turn bar, and I don't know why I'm having such a hard time with this chart, so I'm just going to close it and go back to my other one. Give me just a second. But what I'm going to do really quickly, save as, I'm just going to do this as this. And then I'm going to do this here. Okay, what I want you to notice when you look at the chart is that when on the turn bar, you have a green bar with a yellow dot, like this. I'm going to go find a few examples. Like this. That bar, that specific bar, okay, green bar, yellow dot, on the turn, meaning it's bar number one. On all those bars, and someone asked me earlier today what I would do if I was going to scalp through. I've been discussing, putting up the $200 a day in at least one account so that you can pull the money out of there. That is the trade I would take if I were to take a trade over and over and over again. No matter where I look on this chart, here, I'll go back further in time so that we just don't cherry pick it. Let's just do this. Let's load a couple of days real quick. Sorry, I know I sound a little bit like Mr. Magoo, but I'm going to data limiting. 30 days. I'll load relatively quickly. Okay. I'm going to go back and choose a random day. This is 5/22. We're just going to go to 8 a.m. I have no idea how this works. This is 8:30 and the market's opened. Okay. And if I'm scalping through this day, here's where the approximate market open is. I am looking for, if I can only trade one thing and I want to put up numbers, green bar on the turn, green bar, yellow dot, or the other one can be green bar, yellow dot, or green bar with a square within a square. It can look like this, blue with red, blue with any additional color inside, okay, underneath it. So this is valid, this is valid, this is valid. Again, all I'm looking at is scalping out of this thing. I'm not trying to capture the range or anything else. The question was, what could I do to make money right there and put that money on the table? So it would have to be on the turn bar, this right here. Again, you'll notice I'm going to go slowly. Green bar, yellow dot, blue square underneath, right? Green bar, yellow dot, blue square underneath. White bar, yellow dot, I would take that. Okay, stop. Well, depends on how quickly you scalped out of it. Stop, stop, win. Okay. See if I missed anything upstairs. This would be a stop. Again, you have to be cognizant once we've done this straight up deal. I'll discuss that later. But if you took these on the turn, clearly you got one scalp here. But you obviously want some kind of pullback once it's made a 100-point extension, right? So I expect most people to be able to adapt out of that. Again, scalp, scalp. Scalp, maybe win, maybe stop. That's probably a stop for me. I would have tried for more. Again, maybe scalp. Oh, this is 4 in the morning already. Sorry. I didn't realize we pushed into Asia. So let's go look at another day just randomly. Push it forward a little bit. So this will just, here we'll just do Friday, 8:30 a.m., which is market open. So again, if I was looking for what I was going to trade, bell rings. It has to be a green or white bar. It can't be a yellow dot by itself. So this would be trade one. I would take that. I probably would have taken this. It's pulled back enough where I would have tried that. That's either a quick win or a stop. Again, I would look at where the support and resistance are too, but that's the bar when I'm looking at, hey, I'm looking for a long. That's what I want. This is definitely a stop. You can see how hard the trend down is, right? Green bar, yellow dot there on the turn. Again, that's a hard call when it's all the way up there. I don't know if I would have taken that. I would have taken this. No, not in the last hour, or at least not that deep in the last hour. I might have taken that, might have. Now, let me explain how to, ways you can distinguish whether your trade will work or not, okay? Let me go into phase 2 of this. What I would be looking at, let's say I didn't know where the hourly levels were, right? What I want, if I look at the 15-minute chart, where I want my trades to come from is on a 15-minute bar. Let's say I was looking at, well, even on Friday where it was crazy, right? It's fine, let's go through there. What I would do, oops, we're not all the way down. There we go. What I would want to do, per example, see where I look off to the left and I see these big long wicks and these tweezers bottoms in here? I would highlight those, right? Like I would like to come out, what those 15-minute bars are telling you is, hey, there's support in this area. They should at least attempt, right? They should at least attempt to be responsive. And there's one of two ways to do it. You can either do it when the wicks are opposing, or when they're being left behind. So let me give you an example of that. Like here, so see this in here? I would have highlighted this as well. If I get in here or just underneath here, I want a green bar with a yellow dot up. So if we go highlight it, we'll change the color of this so we can distinguish. This was from earlier. There's really no what I would consider um, distinguishing wicks in this area that I would have highlighted off of, but I would say down in this area you should find responsive buyers, and I wouldn't know that until after 11. So like I would put a line right there, and again this would be from um, after 8 in the morning, right? So this was obviously open drive lower, right? So as I'm looking at this, I would have gone, okay, let's go look and see how the would have performed in those highlighted areas. So now I can come over to this chart. So here we have it. So the trades I would have taken in here. So this I would do a little bit differently. I'm willing to take almost any bar with a yellow dot up if it's within a wick off to the left. So I would take this. I might have taken this. I can't say that. I wouldn't have. I prefer to be in the first 3 bars. I definitely would have taken this and this. With a 1 bar, the stop would be opposite plus 2 points. And again, I probably take this as well. I might even take this, as long as it's within the area where there's a wick. And when you look over here, oh, you know what we don't have here? This is going to be later in here where this is going to kick in. I apologize. This part is inaccurate, and I'm going to tell you why. Sorry, I made an error, and I just want to point it out. When I drew that, right, I drew it like this. I drew it based off of this. And so there would have had to be something over to the left to make me draw that. And there just would not have been. What I would have drawn, actually, I can tell you what I would have drawn here. Let me show you what I would have had going into there if I was just using the wicks. Would have been this. See this long wick and see this wick right here? See how they overlap? I would have hit that right there, just like that. And then when I got to this part here, I would have drawn it like this. So that would have been, so when we're over here, right? So it would look like this. Okay, so see the first time in now, how that's, this green line is coming from all the way back over here to the left. And what you'll see there is that was a very extended inverse head and shoulders, right? So this was the attempt at the, left shoulder, right? This was the breakdown. You'll see the backside test forms a giant head over here. And then when it came back over here, this was the right shoulder. But more importantly, what I know is because that wick was back there to the left on the 15-minute, that this is where I want to be executing. So this is handy because if I look at this from this standpoint, right, what you can see is, first of all, if I limit my trades to the green bars with the yellow dots or the green bars with the squares or a combination thereof, I get so I want to point something out. I was talking about the $200 a day in an account. That's a move from 59 to 72. So that's 59.69 and plus two more points. So that's like $260 more or less, this little move on one contract, right? If I shoot for 10 points, $200, right? I would not have taken any of these. Where I have these arrows, these would be gone. Let me erase this. Not this time through. Okay, so now the only one I'm taking would be this trade right here. My stop is the low of that bar plus 2 points. I promise you it survived right there at 10 o'clock. Okay, and now I'm not taking any of these other trades don't meet my criteria of any sort, right? It was this one and then this one, right? And this one was coming off support. Now you see it push. Right? And now I'm waiting for it to come back in. And again, you'll see when it comes back into that support level, this was from that 15-minute bar that was formed at 9:46 a.m. You see that green bar with the yellow dot, and now that was your home run trade. But even if you just traded it as the $200 trade, you still ended up picking up your additional $200. It just took patience to get it. And by the way, we'll have an algo that does this for us. So I didn't mean to turn this in. I'm obviously going to have to do this a second time, revisit this idea, but I want to show how this would work. Okay. As these bars are being formed, and I would use the 15-minute bars, right? We'll have a combination of line trades and zone trades, right? So let me explain how that would have worked using another day. Let's erase this and go to Thursday. Okay, so on Thursday coming in, this is how I would have had the chart looking, right? I would look back to my left and I would have gone like this. I would have gone here. I also would have had a zone here. Let's see if I would have had anything behind it. Oh, I would have. No wick on that bar. I would have had a level there. Let's see if there's anything over here to the left. Didn't get down that low, and I probably would have redrawn this wick right here. So let me show you this. I would have highlighted this. Okay, so the date that we are looking at would have been well, now let me think this through. Where was I coming at this from? Sorry, give me just a second. I have to think through my, there it is, all the way over here. I had to go all the way to the left. Got it. There we go. Okay, so I apologize. I lost my space on where I was trying to draw these from. A little bit Mr. Magoo this afternoon, but what you can see, hold on. Oh, we were looking on this Thursday, the 19th. That's what I wanted to show you. So I was coming back to the left to get the zones. Got it. So this is where we would be looking. This was the open, right? And so I know these zones were all positive wicks, meaning they came down and they found responsive buyers, right? So this is a looking underneath the responsive buyers. So now I can come in and look on the same day, on that 19th. Perfect. Now we have a pretty clear idea of what's going on. So first of all, I want you to see earlier in the morning. See that zone would have already been there. I would have drawn it the night before. Long out of that zone. Really, the green bars out of that zone are long. Notice there's no false positive bars through here unless you didn't take it on the turn, right? So then when we get down here, notice that once we're back in physical contact with that location, right? So this is 8:30 in the morning. So I want you to note there's a big distinction between when the bar just fires green in the zone and green or green with yellow dot on the turn, right? So this is on the turn, green bar, on the turn, green bar, right? On the turn, green bar, stop on this bar, and then that was the end of the day. Oh, that was a half day. But that's exactly what it should look like. So at any rate, this video didn't go nearly as smoothly as I wanted to, right? So let me recap, and then I'm going to do another video when it's completely clear, right? So let me recap. If I was just going to trade the chart blindly and just look at it, I would always be taking these green bars with yellow dots, right, on the turn, or a white bar with a yellow dot on the turn, because I can go almost anywhere on the chart, right? And as long as there's been some kind of dip involved with that move down, that bar usually gives me a high degree of confidence that I will find responsive buyers off that bar. And we have, for those who want it, we have a bar that'll just take that green bar, yellow dot, right? There are markets where you have to distinguish whether we're in support or not in support, but it works highly effectively, right? That if I was going to look for one particular bar, it works highly effectively, okay? So the next thing that I would do is if I was looking at a chart, so now here I'm going to highlight this so I don't make the same mistake twice. And I'm going to go like this, erase lines, yes. So if I was looking over here on 618, if I was trading on 618, I'd go back to the left looking at 617. So this will be easier for me because I can see that we were contained within that day. This is how I would do those charts, right? I would do this bar here, like this. I would do this. After 8:30 in the morning, I would do this. So it would be color. We'll change the color to yellow so we can distinguish it. And I would have done this. Those would be the levels where I'd say if I was going to take a trade, an algo trade, those would be my most desirable areas to take an algo trade, right? And then I would have, by the way, at 12:30, I would have, if we could get an extension like this, I probably realistically would have labeled out this as well as a place to take the trades to the right of that, okay? So on the 18th, 618, the way that looked, so here's 8:30 in the morning. Okay, so remember all that's here at 8:30 in the morning are these green zones, right? So you can see I just don't get the green bar with the yellow dot on the turn or even a green bar. The only way I could have taken advantage of this would have either been to take the white bar with the yellow dot stuffed or to take this green bar up right here. That's a trade I'll discuss later, right? Again, that's not on the turn, right? As you look, now this yellow, that mustard gray area is now formed. This is where I would have looked to get my algo. Again, you can see once again, no, no yellow dot formed on the turn. And if you're the most conservative, you would not have gotten a trade there. And so let me address that for a second. And then later in the afternoon, see how, let's assume this was formed by now, this green bar. So I would have taken this and I would have taken that. That could have easily resulted, I either scalped right out of it or I didn't recognize that we were coming off that and I was looking for a long. And I could have easily taken 1, 2, even 3 stops here, right? If I didn't scalp right out of these. So again, if you went back to, I need a green bar with a yellow dot, right? So, or a white bar with a yellow dot, what you would have ended up with would have been this. 1, 2, 3, that's your winner. If you did the green bars on the turn, you had 1, 2, 3, 4, and that's 5. That's 6 right there. So part of the challenge is if you don't know how to read or target where the market's going, that trade becomes more difficult, right? If you limited yourself to the yellow dot bars, which takes discipline because sometimes you can sit there and it won't show up, right? You ended up with 1, 2, 3, 4, and you either ended up profitable or break even through that series. Now, no one likes to come out break even, but it's good to know that's what you're looking for, right? And then you can see as this series down here carried to the downside towards the close. That was outside, that was outside. All of this is outside. So now that I know that, I didn't want to just kill the video, but that'll be the best way for me to explain right now. I know it's not super smooth or marketing or well explained, but I will